All right, guys, we are here live this morning. Good morning. Hope you guys are doing good today. Let me make sure we got everything going good here. Hold on. Whew. All right, we're here. Nasdaq still over 21K, a little bit lower than we were yesterday, though. Nvidia went all the way up to 136s in after hours yesterday. Came all the way down to 132s this morning at 134s roughly right now, just underneath it. Palantir still going crazy, under 130s now, though. Hit 130s yesterday. Tesla at almost 340s. So Tesla has had a crazy run, tapped 350 yesterday after hitting a big run this past week. And yeah, markets are up pretty big still. Markets are up pretty big. Today, we got the biggest economic report day of the week. We got Jerome Powell. We got PPI inflation data. We got jobless claims unemployment. We have retail sales data. We got Empire and New York manufacturing data. We have more as well. So we'll see how that goes. Good morning. Let me know how the sound is. Sound should be pretty good. But let me know. Ooh. See, we're now over the volume weighted average price here, over the 200 exponential. I mean, I'm going to see what we get on this. You guys doing good? Sound good? What's up, good news? Sam, Ed, Fernando, Melody, Jason, Britt, Ray, Pawn, Faye, Phil, Trey, Omni. Yeah, we got Powell speaking today for sure. They say ETH is finally outperforming Bitcoin here, but we got UNAITH. Bad news deepens with the report of Medicare fraud investigation. So United Health fell again early this morning following a report that the Justice Department is investigating the company for possible Medicare fraud. If we take a look at United Health here, it's had a really bad time, man. This thing is losing so much of its value. Like, wow, this is one of the single biggest losses in stock value this year. This thing ended up dipping from almost $600 a share. It's now down almost 50% in the last week and a half, 2 weeks for United Health. So this thing dropped really big on about a month ago. It dropped from 600 down to 420s, 440s, 450s, and then again the day before yesterday, in pre-market, it dropped again pretty big. You can see the recent action for UNH is just terrible. So this is a really bad falling company right now in markets. United Health, UNH, terrible company right now. Just been getting really beat up. I'm not touching it. Maybe there's an argument for a dip buy somewhere in here, to be honest. But I'd have to look a little bit deeper into it. But yeah, United Health, top right chart. Just not looking good. Not looking good. We got Nvidia here doing some pretty good things though. Nvidia went all the way up to 130s, almost back to where it was prior to this whole crash, correction, tariff slump. Nvidia's trying to move. We got AMD at 117 still. AMD's looking pretty nice. And yeah, I went out drinking with some friends yesterday, and I can feel it this morning a little bit. I'm not that bad. I'm okay. But we had Korean barbecue and Cape Pot. It was good, honestly. I'm going to go back to that place. We had something called a soju, which tasted really good, honestly. I'm going to, that was good. Feel it a little bit this morning, though. I think I just had to get up early. I didn't feel like getting up early this morning. I didn't feel like waking up. But I'm here. We got a big day today, guys. We got a big day. So Dick's Sporting Goods is going to acquire Foot Locker in a $2.4 billion deal. So DKS and Foot Locker. I think it's good for them. I think Foot Locker needs to be acquired because nobody's buying shoes from Foot Locker as much anymore. But Dick's is up. FL, Foot Locker is up the biggest, though. Foot Locker's up to, a very large percentage. Foot Locker is up almost 100% on this deal. Look at Foot Locker. Opened up at 12. It's now at 24, basically. So about 100% gap up here for Foot Locker after this deal between them and Dick's Sporting Goods was announced. Yeah, look at FL. It's up big. Alibaba on Thursday did report earnings. They posted good earnings and sales growth came in lighter than expected, though. They reported 22% rise in fiscal fourth quarter adjusted profit to almost $30 billion or $4.11 billion US dollars. Adjusted earnings came in at 173 per depository receipt. Revenue rose 7% to 236 billion or won or 32.58 billion USD. Baba with some earnings. They're down a little bit. Not down too much, but they're down some. So we'll see what happens there. Walmart earnings. Ooh, I'm awake. I gotta drink coffee though. Yeah, we got some other news. Walmart CFO warns it cannot hold off price increases forever, and price hikes from tariffs could start later this month, according to CNBC. TikTok charged by EU tech regulators with breaching EU online content rules. They did not provide necessary information about content of advertisements users targeted by ads, the EU regulators say. So we got that news coming out too. But yeah, today the big story is PPI inflation data. We'll put this up on screen here because today that's the big story is PPI inflation data going live. It's expected today, I believe, at 0.3% month over month. Yeah, 0.3% month over month for PPI inflation data. Retail sales expected at 0.1%. Last time it was 1.4%. Is that right? Let me make sure. Hold on. Let me pull up a different source. Yeah, PPI today expected, or retail sales expected at 0.3%. Last time I showed them at 0.5%. That was core. Where's regular retail sales? Retail sales. Yeah, expected at 0% today. Last time they should have at 1.4%. All right, guys. So yeah, we got the here's the updates on the news we got today. Here, PPI inflation data shows you what they're expected at today. All that good stuff. Let's see if we get some good trades in. Yeah. So again, they're right here. It's at 8:30 Eastern Standard Time. Jerome Powell's at 8:40 Eastern Standard Time. Retail sales is at 8:30 Eastern Standard Time. We got the Philly Fed Index and all the other stuff. But yeah, look at Foot Locker. It's going. I'm trying to see any other big news we had today, but Yeah, we'll get a timer up here. We still got an hour and 15 minutes. Just about, yeah, about an hour and 15. This timer's a little bit early, but I'd rather set it a little early than late. Let me move myself over a little bit and make myself a little smaller here. There you go. All right, so bond yields. Take a look at bond yields this morning. Let's talk about it. Bond yields over 4.5%. They're dipping down a little bit today, but they ripped up yesterday. They are now down slightly this morning, but over 4.5%. Bond yields on the market momentum has continued to push up. This showing a higher interest rate sentiment. So interest rate sentiment is now higher. And it makes sense, and I'll explain why. And it makes sense because the economy is looking a little bit better situation than it was, right? And so if the economy is in a better situation, if it's looking less likely that we're going to get some super deep recession or depression, bond yields are going to increase because that means bonds are selling off, right? Which means a higher interest rate sentiment because we have less of a need to cut rates if the economy's doing better. We have less of a need to cut rates, and so in turn, yields, which parallel interest rates, are going to go up, as well as the fact that the easiest way to look at it is that bonds are selling off. Bond prices and bond yields inverse each other, and so if yields are rising, it means bond prices are falling, and that means they're getting sold. And it makes sense. People are flocking to the stock market as there's more optimism in the stock market. You know, there's a lot of reasons for bond yields going up, but those are most of them. And yeah, bond yields 4.5% right now, 4.5%. Looking at Palantir here. Palantir again went all the way up to 133s, almost 134s yesterday. All right, look at this pullback. I kind of want to buy a dip here, but I think I'm going to wait. How you guys doing? Let me check back up on chat. Well, that's probably why. Okay. I got bull trapped on UNH. Sorry to hear that. When will Fed drop rates? Powell wake up? Yeah, I mean, yeah, let me do a poll for PPI. I mean, I don't think we need to drop rates as much as we did maybe a month, like 3 weeks, 2 weeks ago. I mean, I'm not saying we don't need to cut rates, but all right, so does today's PPI inflation data come in higher or lower than the 0.3% expected? Let me know what you guys think. Does PPI show up higher or lower? I'm showing anywhere between 0.2 and 0.3. But yeah, we'll just call it. 3. Vote on the poll. Let me know how you feel. Again, I think there's a lot of arguments for and against rate cuts. I think we need economic weakness and inflation. We do have inflation getting a little bit better. When we took a look at inflation data from Tuesday this week, it did show up better than expected. Today's another story of that, though, another side of that, inflation token, which is at what does PPI inflation, wholesale inflation look like? That's what we're going to be looking at today at 8:30 Eastern Standard Time in about an hour and 10 minutes. It's a very important report. Not only that, but we have retail sales. We got manufacturing indexes gauging strength or weakness in manufacturing. We got a whole bunch of stuff. So, inflation is down 2%. Their target, and people are working. Yeah. Yeah, so I mean, Robert, but you misunderstand, brother. So, okay. The reason you cut rates is if people are not working. If people are not working, not spending, the economy needs to be propped up. You cut rates. Okay, you do not cut rates if people are working, spending, the economy's doing okay. You cut rates for economic weakness. If the economy's weak, you lower interest rates to stimulate it. If the economy is doing better, as it has been over the last couple weeks with the reducement of the tariff news and catalysts that come out over the last week and a half, if the economy is looking in a better spot, you have less of a need to cut rates, at least in the Fed's mind. And so part of that argument is correct, in that inflation has shown a little bit better than expected. But the Fed is going to argue that if inflation is under control, but the labor market is still strong, why risk making inflation not under control by cutting rates? That's going to be their argument. I'm not saying I agree with it, but that's going to be their argument. So like if we had massive economic weakness imminently, that's a different story. And I think a lot of people would argue maybe we had that a couple weeks ago. But I think with the tariffs and the deals getting done and the market rebounding back up and bond yields selling off or bonds selling off and yields spiking, I think a lot of people are going to argue we have less of a need to cut rates. I'm not saying I agree with it, but that's kind of what it is. Yeah, I mean, Raven, I don't know if I think that's true either. I don't think we have record unemployment and layoffs. I'm not really sure where you're getting that. It seems like just really sensational. Like, you know what I mean? Maybe we do. I don't know. Maybe I haven't seen it, but I'm not really seeing any record layoffs and unemployment. Unemployment seemed pretty light, or seem. I don't know what it was last time. It was like 4 point. It was like 2 point. Oh wait, what was it? Let me see. It was like what? Yeah, it's like 4.2% for March. I mean, I don't know if you understand what record unemployment means, but let's just look at a graph real quick, shall we? Let's just look at a quick graph. And again, you want to be careful not to sensationalize everything in your mind. Here's unemployment. Civilian unemployment rate, which is probably the most important one. This is where we are now. This is where we were 2020. This is where we were 2008, 2009. Again, this is where we are now. It doesn't look like record unemployment to me. I mean, I'm just saying. It could be, but, All right, guys, so I should have bought this dip. I was really thinking about it. I should have. Again, I'm curious where you heard that, Raven. I'm genuinely curious. I just want to know. I'm interested to know. Yeah, I mean, typically, I would rather us combat inflation in a more profound way and enter a little mini recession personally than have inflation get unstable and out of control and cause problems. Personally, that's just my own bias. You know. All right, so the president claims India offered 0 tariffs, and he urged Apple to stay in the U.S. He said India has offered to drop tariffs on U.S. goods as part of a potential, trade deal that they're doing. Speaking at his business event, he claimed India is, quote, willing to literally charge us no tariff. He also urged Apple and CEO Tim Cook not to head to India and expand there, and instead will increase manufacturing increase their manufacturing here in the United States. Do you guys agree with him here? Nvidia up to 134s though. Nvidia doing really well. Look at Nvidia pumping up. Palantir up there too. Ugh. Yeah, I always forget to mute Discord. There you go. Look at Nvidia, man. It's pumping up too. Is OmniArc like a big? I mean, he's not small channel. Hey, what's up, OmniArc guy? I'm not really Rise of Kingdoms. I've seen the ads for that game. Never played it though. There was a time I played a lot of mobile games. The issue that I found, I played one. I can't even remember what it was called. It was like Tactical. It was fun too. The problem is that it was so pay to win. And it felt so good to win, you wanted to pay it. And before I knew it, I was down like $300 buying the best, tools on the game. I think it was called Tactical is what I played. I haven't played it in years and years. I also played Madden Mobile. And dude, just bought the best players, best QBs. I'm very susceptible to pay to win games. So I just can't do it. But welcome. What's his name? OmniArc. What's up, bro? Welcome, dude. Yeah, we got PPI inflation data going live today, 8:30 Eastern Standard Time. We also have retail sales. We got manufacturing index. All of this stuff is going to move markets and finance. You want to be careful. If you're holding short-term positions at 8:30 Eastern Standard Time, you might want to be careful. I'm not saying you should sell or buy or do whatever, but markets move at 8:30 Eastern Standard Time today. We also have Big Papa, Jerome Powell, speaking, technically scheduled for 8:40 Eastern Standard Time, right after 8:30 Eastern Standard Time. And so be ready for that as well. We got Powell speaking 8:30 or 8:40 Eastern Standard Time. And I think he's going to speak on some stuff regarding the economy, but I'm not 100% sure, just to be completely honest with you guys. But I'm still going to cover it. I'm still going to stream it. We're going to cover the opening bell live. And so just be ready, guys. Hit the like button. Help boost the stream. We appreciate it. Yeah, no, I feel you, OmniArc. I get it. If it was my job, bro, it would be worse than this. You know what I mean? Like, if it was my job, oh, dude. I would say the biggest one is MLB The Show. If I play MLB The Show, dude, I'm trying to buy Jacob deGrom now. I'm trying to buy all those good, batters. Like, I'm just trying to buy my team. And I think that's what they want you to do. I'm trying to buy studs. I think that's what they call it. Or stubs. Not studs. Don't mistake what I just said. I'm trying to buy stubs in MLB The Show, not studs. Don't judge me. What's up, Beach Mom? How you doing, brother? The market is... Yeah. Yep. I knew it when I said it. It's Stubbs, S-T-U-B-S, Stubbs. I knew it as soon as I said it too, that I was gonna have it used against me. Yeah, for sure. I could feel it as soon as I said that. Nasdaq's ripping up though. Let's change the subject. Nasdaq's ripping up. We're at 21,295s here, chat. 21,295s. We got a big resistance level at like 21,317s. Palantir again looking nice, going up to 130s, almost 130s here. Well, they earn crypto from it. That's why it's called a crypto game, Jonathan. I don't really play crypto games. And honestly, the whole crypto game space has lost a lot of steam over the last few years, to be honest. They had some really hyped up games, and I think a lot of them underperformed. And so crypto games have kind of fell off a lot. The interest in them specifically have kind of fallen off a lot. But in theory, you play the crypto game, you earn crypto, and you get to play a game and earn money while you do it. You know, there's a basic thing that's pretty true with all investing, though. If it's too good to be true, it probably is. I'm just going to put this out in the chat. Stubs. Cough, cough. Yeah. But Tesla all the way back up to 350s. Nvidia up to 135s. Again, Amazon up to 208s. Meta at 650s. Okay, so today we have jobless claims unemployment filings going live, also at 8:30 Eastern Standard Time. They are expected today at 229,000, right around what they came in last time at 228. So last time they showed up at 228K. Today they're expecting 229K. Higher is worse for the labor market. So if we get higher jobless claims, it means that more people are filing for unemployment week to week. Okay, so this is a quick look at more real-time unemployment data versus like unemployment report or something like that. This is more real-time week-to-week unemployment data. It comes live at 8:30 Eastern Standard Time. Today it's expected at 229K. We also have two economic reports in terms of manufacturing. We have the New York Empire State Manufacturing Index. They're both expected to show up negative. The New York State manufacturing is expected to show up at minus 8.2 to be exact. Philly Fed index, manufacturing index, is expected at minus 11. It shows up at 8:30 as well today. We got retail sales data. It's expected to show up at 0%. 0%. And this is relative to last month showing up at 1.4%. So, you know, you could look at retail sales in a good or bad light. You could say, hey, retail sales were stronger than expected. That's good. Means economic growth. You could look at it and retail sales were stronger than expected. That's bad because of inflation problems. Either one would not necessarily be wrong. It just depends on what the market wants to digest it as any given moment in time. And you got to just be careful with this because market might like higher or lower retail sales. I would say we're in a period where markets fear economic weakness as well as inflation. And so I think in terms of trying to predict the reaction that we get from a higher or lower print from retail sales is a little bit more difficult than normal. So just be careful there in terms of retail sales. We don't know what the market's going to want. PPI is generally like we want lower PPI inflation data. All right, guys. So again, we're going to summarize all the big economic reports we got going live today in about an hour. We also have industrial production and capacity utilization rates at 9:15. We got business inventories, home builder confidence at 10. And then tomorrow we got Michigan consumer sentiment data, which is kind of a big report as well here. So just be careful. Do you ever buy NFTs? Not anymore. I think NFTs had their moment in time. I bought a bunch of the basketball ones, the Hot Shot NFTs or whatever they were, NBA Top Shot NFTs. And then they lost all their steam and nobody cares about them anymore. And basically I just see it as like a loss. Did the Philly Fed Index show up at minus 26 last time? Yeah, it did. Minus 26.4. Okay. But yeah, Japan GDP showed up too. All right, chat. Capital One Financial April in charge-offs came in at 5.66%. Delinquencies at 3.95%. We had NBP's Norowisky saying that rate cut possible in July or autumn depending on the change of the bank's inflation forecast. Interest rates unlikely to change in June. Yeah, we already know that. U.S. reportedly considering the possibility of revising Japan-U.S. trade agreement and bilateral tariff negotiations. We got all this news dropping right now. I haven't really traded at all this morning. I'm going to try to wait. We did really well after the bell yesterday, and I don't want to give too much back early. So I'd rather just wait and trade some. All right, guys. So, yeah, PPI inflation data. Foot Locker got bought out by Dick's Sporting Goods, DKS. So, Foot Locker's gapping up about 100%. If we take a look at stuff this morning relative to the previous closing price, a lot of stuff's slightly red, although it had really good days yesterday. Like, we had another green day for most of this stuff. You can see NVIDIA's previous closing price right here at 135.40s. If we take a look at the NASDAQ previous close let's take a look, is right around 21.4s. So the previous closing price on the NASDAQ's way up here. And so we're red, but most things had a pretty green day yesterday. So we put a 5-minute chart up. Like, a lot of stuff was very green. Look at the day yesterday, just very green and stuff. So pretty upward trend short term as well. So a lot of stuff starting to fight back and head towards that red to green level, but still technically red on the day. I mean, we got a lot of stuff that we use, Cindy. I use Epidemic Sounds music is what I use. Yeah, I use personally Epidemic Sounds, which is like a free music provider. Jerome Powell's at 8:40, or yeah, after 8:30. Okay, yeah, we'll just leave that up. All right. Again, here's where unemployment rate currently sits. Bond yields are higher, but they're pulling back a little bit recently this morning. I would say Foot Locker is a little bit more. So you got Dick's Sporting Goods, which is mostly like an all-encompassing sports store. Usually they're located at like malls. Foot Locker is a shoe store mostly, but they also sell some other stuff. Foot Locker typically focuses on having more of an inventory of shoes. Now they both have a lot of shoes, but yeah. Yeah, we got TTWO today, Take Two Entertainment. With GTA 6 getting pushed back. Honestly, we mostly had beats this morning. Walmart BDPS, Baba BDPS, Deer BDPS, GAM BDPS, Nice BDPS, Birkenstock BDPS. What is Take Two? Is this evening? Yeah, it's at 4 or 5. Take Two. We also got Kava, Applied Material, Beam, Docs, a couple other ones too. So GTA 6 got pushed back in a year until 2026 in May. I guess I'm going to try to buy this here. I want a regular NASDAQ contract though. Again, this is a combine account, so it's a little bit different than what I would normally take. We'll use a risk under 80 if it breaks. Okay. Good. We'll take half off here. Let the rest ride in case it turns on me. Yeah, so we got a summary that we're going to put on our X.com page. All right, look at this pop. We'll add a little piece to this here, just because we can. And then we'll, if we turn on against this, we'll cover it, which we just did. We covered half of it, but I think we actually got out profitable here, so we're flat now. See, I could add back here, but I think it's risky. We'll try. This is a challenge account, so this is not how I trade my normal account. It's just early in the morning, so we're playing around with this. Looking at our poll, alright, we're gonna have to cut this now. Yeah. I mean, we're up probably $900 on this account still. We'll switch to our actual funded account and see how that goes. We made money on this one yesterday. I don't know what we're gonna do with the last one. Powell speaks after 8:40 market time, give or take, after 8:40. Yeah, so Powell speaks. So we got PPI inflation data, retail sales, New York Empire State data, and all that stuff going live. After 8:30, and then we have a whole bunch of stuff going live. 8:30 Eastern Standard Time, retail sales, New York Empire State Manufacturing Index, and more. And then we got Jerome Powell speaking at 8:40 Eastern Standard Time is when he's scheduled to speak. We're going to cover and stream all of it live. All right, so market just turned a little bit. Let's see if there's some news. U.S. EPA sends proposed rule on biofuel blending volumes beginning in 2026. What's going on? ASM International to pass on tariff cost to buyers and says no disadvantages. Let me change this. This is one of those Thursdays for a lot of data. Yeah, honestly, today's the busiest day of the week in terms of economic reports. We have more economic reports dropping today than any day this week. CPI Tuesday's big, but today is bigger in terms of the sheer volume of reports is what it is. So like today's bigger just in terms of like the volume of reports coming live. Palantir coming down though. Look at Palantir. It's dipping down. It's at 128.40s. I think a lot of stuff's trying to get up though. Like, I think Nvidia is getting closer to that previous closing price. It looks like it wants to hold. So we'll see. We'll give it time. We'll give it time. Was the last CPI report negative? No. Yeah, Nasdaq's still coming down. It's right at the 200 EMA though, so I'm watching that spot. Every middle of the month he speaks, this happens. What? Yeah, I mean, I don't know how much he's going to speak regarding the economy. I'm really not sure. Yeah, I'm pretty sure he was talking about just the thumbnail pawn. I mean, you could delete the comment, but I'm pretty sure he was just talking about the thumbnail, bro. All right, Nvidia's starting to bounce back up a little bit. Let's see if that push continues. Palantir still coming down. I'm gonna put a 1 minute chart up on this. I think a lot of stuff's creeping towards the previous close though. Look at Nvidia. It looks like Nvidia wants to get up there. I'm wondering if we're going to get choppiness leading into the... Why is your name weird, John? Oh, you're talking about Jonathan. Is my name weird? What name? European Union is considering restraining quotas on imports of several agricultural goods from Ukraine, according to Bloomberg. All state catastrophe losses for April showed up at 594 million. Look at that turnaround here. Look at this drop. We went right up to this level and then dumped down. Weird. And I would assume this is a short, but like, who freaking knows, man? This is weird. We could have choppiness. It kind of looks like a head and shoulders pattern right here, doesn't it? Here's this previous shoulder. Here's the new shoulder. There's the head. It's not a perfect one for sure, but it kind of looks like one. All right, so Aviva CEO says government mandates and UK pension plans push into private assets would be the red line for sector. Yeah, she was talking about the other John, though. I think pawn. It's all good. I keep waiting for Powell to play. Everybody always says, is the market down in anticipation of PPI? I really don't know. PPI inflation data is big. Jerome Powell's big too. I don't know. I really don't know. We got 40 minutes left still, though, so we're taking our time. We came right back down to the 200 EMA. See if we continue down. The head and shoulders pattern did play out, kind of. That song's a little bit too much, I think, right? Tesla coming back down. It's at 340s right now. The problem is we just tapped the 200 EMA. I don't want to see like a bounce at this 200 exponential level. Nasdaq right at that 200 EMA. There it is right there. Nvidia, I think, wants to go up to this previous closing price at 135. But I think we got too much economic data today to really show some type of big influence here. Big Papa Jerome Powell. That's his name. Do you like any music? I'd never heard of them, bro. Hey, do me a favor. Hit the like button. Let's at least break 100 likes. I mean, listen. I'm not going to beg for it. But do it now or I'll hate you forever. You've got 1 hour. You know, we'll try that approach. I mean, I like some electronic music. I like the guy I've been listening to a lot lately. I think it's Gravagers is his name or something like that. Gravagers. He's pretty good. I like Gravagers. I like there's a couple good songs I like, but hey, what's up? Yeah, Powell's speaking today. 8:40 Eastern Standard Time. In that regard, we got about an hour, a little bit over an hour, a little bit under an hour, I mean, for Powell. Again, the big thing is PPI inflation data in like 35 minutes or so, and then Powell speaks 10 minutes after that, technically scheduled. Scotty doesn't know. You need to... Scotty doesn't know we have more likes than 10. You got to refresh your page. But don't tell Scotty. If you know, you know. All right, guys. Hey, we're consolidating right around this 200 exponential moving average. We might bounce. Sometimes you see this big, like with the 200 EMA right here. Sometimes you see a big bounce. You see how well it's holding the trend. Look at, here's the 200 EMA last time. And we actually held it really well. And now we rebounded back up. We could see another move like this, but we could also fall underneath it and do something else. And so because of that, I'm just kind of sitting tight on the NASDAQ here. I don't really want to take any big positions. We got economic report dropping very soon. And so I am going to be very careful today. PPI is bigger than Powell, right? Unless he says something extreme. Probably, but I think they're both pretty big. I would say PPI and Powell are pretty even. Like the big Powell streams, typically all I can do is look at my views, right? The big Powell streams will have like 4, 5, 6,000 people watching. Sometimes more than that on the really big ones. PPI, we usually get 2,000 to 3,000 people or so. And so it depends, but yeah, it depends. We'll see. We still got 35 minutes or so. We got about 1,000 watching already, so we'll see what PPI gives us. Where's Bitcoin at right now? Is Bitcoin up? We got to go. It's at 102,000 right now, so Bitcoin is down a little bit over the last 24 hours after hitting 106,000 for Bitcoin futures around May 10th. We did bounce at the 200 exponential, but it's not a high percentage enough of a bounce for me to be interested in it. So I'm just going to wait. Still consolidating. Let's see what this 275 level does to the NASDAQ here. Again, Palantir, one of the big stories of the last month. Crazy big 100% return on Palantir. All right, guys, so let's talk about it. 8:30, we got the Philly Fed Index. It's the diffusion index of factory activity in the 3rd Fed District. Reading above 0 signals expansion in manufacturing. Below indicates contraction in manufacturing. It's expected at a contraction in manufacturing at 11.3%. Last time was minus 26.4%. At 8:30, we also have the Empire State Manufacturing Index expected at minus 12.8. It's a regional gauge of general business conditions from the Fed district's manufacturers. The same thing, above 0 readings point to growth, below point to contraction. It's expected at minus 12.8. We got retail sales data. 8:30 Eastern Standard Time is expected at 0% is what I'm showing. We also have retail sales data, measures the monthly change in total U.S. retail and food sales. We also have core. We got the PPI price index. It's probably the biggest economic report we get, dropping at 8:30. It is tracking the average change in selling prices received by domestic producers, consumer inflation, a leading indicator of consumer inflation. Powell is going to be discussing his framework review, monetary policy strategy, tools, communications with potential implications for long-run goals. And then we have some data showing up at 10 a.m. as well. Yeah, hit the like button, hit the subscribe button. We appreciate it. Yeah, so it's all the tariff news. I don't know how this report will impact the market. I don't know if Powell's going to cut rates. I doubt he's even going to mention it. We just had Brazilian. Okay, so the U.S. president said nothing is going to happen until he gets together with the Russian president. So I think I don't know if he's speaking right now, but I don't think it's a big speech if he's speaking right now. We got less than 30 minutes until this data releases here. We got about 1,100 viewers. Hit the subscribe button, hit the notification bell, chat. Let's bump this up. We got a lot of stuff dropping live today, 8:30 Eastern Standard Time, so just be ready. We're doing our best here to figure out what's going on. And you know, I'm looking at this one's good. Pre-market's good. That one's not really that good. That one's good. A lot of volatility lately, man. Salesforce CRM signs definitive agreement to acquire Convergence AI. They didn't discuss any additional details, but we'll put this up on screen. All right, so we're going to make our x.com post. Give me a follow on x.com. We got to make sure some of this data is right. Barron's. Yeah, we got a whole gang of reports. Powell speaking. I'm yelling at AI here. Go away. It's like the post and then it says, just keep it the same as before. Alright. Gotta make sure this data's right. Alright, so read this before 8:30 Eastern Standard Time. All right, look at this big pullback here, chat. We have less than 30 minutes. We got 25 minutes. Nvidia is still slightly under the previous close. I tend to want to think it goes up, but look at the market going back and forth here. We're up and down and up and down and up and down over the past 20, 30 minutes. We're not really doing anything. I think the whole market's going to be apprehensive, especially today. I'm getting ready to do my x.com post. I just want to make sure that some of these expectations are right. Because you know AI can just get stuff wrong. Where's jobless claims, bro? Dang, dude, they don't even have jobless claims. I gotta write this. It's expected at 228. Okay. Last time was 229. Okay. Listen, we'll do this like we got to do. We got the Philly Fed Index expected at minus 11.3. Previous was minus 26s. See, this is wrong too. Minus 26 for Philly Fed Index, 0.4. Retail sales data, chat. Drops at 8:30 Eastern Standard Time. Is expected at 0%. Previous was minus. Okay, previous was 1.4%. Okay, so that's right. Core retail sales. Core retail sales is probably going to be what the Fed looks at the most. It's expected at 0.3%. Last time was 0.5%. We got PPI inflation data. It's expected at 0.2% versus previous. What was PPI last time? Minus 0.4%. Okay. Year over year. Year over year, I see it's expected at 2.5. Previous was 2.7. I don't know where AI is getting some of this stuff. All right, we got the post live. We updated it to make sure it was actually freaking accurate. You're welcome. If you want to see this post, here's the link right here. Breaks down all the economic reports today in an understandable way. There it is right there. Hit the subscribe button. What's up, Chef? I was watching an economist yesterday who said even big businesses who initially supported him are turning against him because he's doing things too fast. Yeah, I mean that's true for sure. It's going back and forth, you know. I think things have gotten better over the last week, really. Like over this past weekend, we had, you know, we kind of hyped people up. The reason you should follow me on X is because, I'll put it this way, prior to last week, right? Prior to this weekend, we told people on our X.com page, we said, hey, look, U.S. and China are getting together in Geneva, Switzerland this weekend. This is what you want to listen for. When it happens, who's meeting, what it means, what might potentially happen. And I told people this last week as well. I thought that China and the U.S. would eventually get a trade deal done, and when they did, the market would fly up. We dropped a lot of the stuff over the weekend, and then we covered the trade deal when it, or the pause to tariff news as it happened before anywhere else. And so at Beginner Trades, give me a follow. I appreciate the love. Thanks so much. PPI inflation data is a signal to, it's what it is. It's wholesale inflation, but it might lead and influence and give a little bit more interest into what might potentially happen for consumer inflation, right? So we want lower PPI inflation mostly. It typically means we're going to get better pricing, eventually leading into consumers. All right, NASDAQ's fallen down a little bit. We're at 21.261. Yeah, the problem is that people typically get a little bit too stubborn, and people are a little too susceptible to what I describe as like marketing. You know, like people get politically biased on either side, and then they just kind of stick to that, right? Like if you're on the left, it's the worst it's ever been. If you're on the right, it's the greatest it's ever been, right? And neither of those things are true. The real answer is somewhere in the middle, and your job is to figure out what the real answer is. I think with the China deal on the table, it's looking a lot better. We're closer to all-time highs than we were. Like if we take a look at the NASDAQ here, here is kind of the trend. So let me clear all this. Yeah, so here's the NASDAQ on the top right chart. You can kind of see like the tariff stuff happened here. We came all the way down to 640s, and then even right here, so many people were acting like the market was just going to super dump right there. The market was just going to crash. Instead, we rebounded all the way back up, and we're essentially where we were prior to all this stuff. Like, we're basically back to where we were now. Doesn't mean we're not going to come back down. Anything could happen. But we're basically right back to where we were. We did have some news that came out just now that says the Walmart CEO says that tariffs create cost pressure, but the larger tariffs on China are having the biggest impact. So that news just came out regarding them. We still got 20 minutes left, chat. 20 minutes. Well, he paused tariffs for 90 days, chef. You know. And again, like I said, you don't want to be too stubborn on either side. You know what I mean? Like, you got to understand that both sides have a bias. Okay? This is what I try to make it really clear. People get too, like, led in one direction from political bias. Right? Like, if you dislike the current president, it might be music to your ears that the stock market's falling and crashing and all that stuff. But if you stay too stubborn on that thesis, you're going to miss out on the rebound back up. And vice versa. If you think it's just the greatest economy and market it's ever been, and you stay too stubborn on that, you can get punished on the downside as well. So just be, the overarching point I'm trying to make is just be objective here. Nobody knows what the market's going to do. Generally speaking, the biggest statistical edge is on the upside, and eventually the market will go up if you hold it long enough. It might take a decade, but eventually the market's going to go up. And so being too bearish, too pessimistic in markets is usually a losing sucker game. Like, it's like a sucker's bet. It's kind of something that people who romanticize Michael Burry and bearish, you know, like they want to be the next big market crash predictor, they typically stay way too stubborn on the downside, and they never recognize the biggest statistical edge in finance, which is on the upside. You know. Anyways, BlackRock CEO Fink says that markets have been disrupted, but risks are not systemic in the annual meeting for BLK. We'll see if that continues. Yeah, political bias is a destroyer of profits. You just tend to miss out on stuff. All right, so markets starting to fall down a little bit here, chat. So we are red now. Yeah, we got a little bit of time until PPI inflation data goes live. Retail sales data goes live 17 minutes. And again, I'm not picking sides. I'm not against you guys. Like, I'm not against anybody. I'm very neutral politically. And I think that's the way you have to be in finance. You can't really get so... If you're too weighted to one side, you're prone to get manipulated, to be completely honest. All right, chat. We got about 15 minutes left. Looking at our poll numbers, we did do a poll this morning. 35% think we're going to come in lower. 34% think we're going to come in higher. 23% think we're going to come in as expected. And 8% of people say, I don't know. Yep, we got a whole bunch of stuff. No, you can make a lot of money on the downside for sure. But the way I describe it, and I say this every day, but the way I describe it is you can make money on the short side, but you better get out when it's time to get out, because the longer you hold a short position in like high cap indexes or the S&P 500 or the NASDAQ or the Mag 7, the longer you hold a short position, the less likely you are to make money. And so as long as you can recognize that and get out when it's time to get out, it's fine. But a lot of the people that are super biased do not have that like timing nuance that they follow, right? Like they think that they could just hold forever and eventually the market's going to come down. Like they have to understand universally, no matter what's going on in markets, you got a certain group of people that are always going to think the market's going to crash. And most of the time, they're the most wrong of all traders. Now, eventually we can't crash, but you got to understand, eventually markets are going to come back up. Eventually we're going to bounce back up. And if we don't, you know, we got a lot bigger problems in the first place. So all right, guys, Nvidia 134s still kind of a stretch on the downside though. Canadian housing starts just showed up. They showed up at 278,000 versus 227.5 thousand expected here. So again, 278K versus 227K expected. Previous was 214. So Canadian housing starts showing up slightly stronger than expected, or a pretty decent amount stronger than expected for housing starts in Canada. All right, so we're flocking down now. So we're getting some red. It looks pretty weak too here. You never know though. We only have 13 minutes or so until PPI inflation data comes out. So 13 minutes. Falling down a little bit more here. Nasdaq still dipping down some. Nvidia still falling, I should say. Yeah, tomorrow we got Michigan data too, which is like, it's been getting bigger and bigger and more interested to like, and more influential in terms of what people are watching. Michigan data, what I mean is that is consumer sentiment by the University of Michigan, as well as inflation expectations. You know, that's been like a bigger thing that's happened. So, all right, chat, 11 minutes here, 11 minutes. Gold, I mean, I think gold is, I like gold, and I say this a lot, I like gold, but gold is on one of the longest bull runs in a while. Gold is on a uptrend that's really since 2016. It's on a 9-year green streak. It had a couple flat years, but it's basically on a 9-year green streak. That's not really my favorite time to buy gold. I would rather buy gold and DCA on pullbacks versus buying it at all-time highs. It's just not my favorite time to buy it. I like gold. I think it's one of the best inflation hedges you can get involved with, but you got to hold it long term, and for me personally it's just a little bit too up. For a newcomer, how dangerous are coins like that? I'm not sure. I don't even know what that is, bro. Are you talking about the penny stock, OTC penny stock? I really don't know what that is. If y'all know anything, let me know. But I would say they're incredibly risky, and most people lose money at them, whatever they are. Thank you for the donation. I appreciate the donation. Remember, guys, I'm not an investment professional. I'm not liable. If you lose, always make your own assessment. Trade responsibly. I can't guarantee anything. Top 3 worst trader potentially of all time ever in the world. Don't copy me. Not an investment professional. Not liable if you lose money. Trade smart. Be smart. Don't copy me. With that said out the way, I have no idea about NXCP. I appreciate the donation. It looks to be a really, really small cap crypto coin of some sort. And, you know, the innate problem with stuff like this is you got a lot of people kind of piggybacking off of each other, telling everybody how great it is, pumping the coin up, and then you get rug pulled. That's the real issue with them, you know. And so if you join one of those communities where they're like, yeah, bro, you know, this coin is great, all they're going to say is good things. And again, but nobody freaking knows how good that coin's going to be. Nobody knows if that coin's going to go up, down, or sideways. Nobody does. And so it's kind of a echo chamber, so to speak, where everybody's going to be talking about how great it is. Nobody's going to be talking about the risks. And I would not stick my money in any of that stuff. It's big risk, big reward, though. I mean, listen, maybe if you get lucky, you might catch a good thing. I don't freaking know, bro. I appreciate the donation. I'm just trying to be honest with you about it. Is it gold a horrible investment? It can't even cover inflation. Gold is like what, like 10x over the past 20 years, or something more than that. Gold is up huge percentages in the last like 20 years, bro. Is it not? Yeah, like here's the NASDAQ on a long-term chart over the past, what is this? Yeah, this is, okay, yeah, this is about 15-year chart on the NASDAQ. Here's gold. I mean, in terms of percentage gains versus losses, the NASDAQ was at 1800s. Yeah, so the NASDAQ has gone up a lot, about 10x. Gold, yeah, but I think you got to look at gold longer term here. Like in 2000, gold was 320s. In some places, it was like 250s. It's now at 30. It's now at 3K. Let's see the percentage increases from 2000 and compare the two. We got 8 minutes though, so we'll probably do this. So again, we were at 250. We're now at 32s. We'll call it 32s. So since 2000, gold has increased almost 1,200%. 1,200%. The NASDAQ, on the other hand, since 2000, NASDAQ was at about 3,600 in 2000 or so. 3,200. We'll just call it 3,200. And now it is at 21.3. The NASDAQ is up about 565%. So to be honest, since 2000, the NASDAQ has underperformed gold. But it depends on where you isolate the time frame of it. You know, like there's certain moments, like if we look at the lows on the NASDAQ at 797s in 03, then that's a $2,500 gain. So it's similar to the NASDAQ, to be honest, when you look at everything combined. All right, chat. We got 6 minutes left. We got almost 2,000 viewers here. Hit the subscribe button. Hit the notification bell. We appreciate it. Let's hopefully get some good stuff today. Yeah, hit the live button next to the play button. Make sure you're fully caught up on stream. And if you put it in 2x speed, you'll be real time. Again, put it in 2x speed. It won't make me sound crazy, but it will also make sure you're not lagging behind the stream. Hit the live button next to the play button. We appreciate the love. Thanks so much. We got 6 minutes left. Again, anybody saying gold has no use case doesn't understand diversification. Okay, like we could argue gold's bad, don't invest in it. That's dumb. Okay, you got to diversify into a lot of different things to protect yourself long term, and that's what you do. You don't put everything in one thing. That's dumb. You diversify into. Personally, if it was me, I'm not an investment professional. I can't guarantee anything. If it's me, I'm buying NASDAQ, S&P, Dow, gold, crypto, real estate investment trusts, some bonds, payments. You know what I mean? Like I'm gonna do a whole bunch of different things to diversify long term, rental income. You know what I mean? Like all this different stuff. That's the right move. That's diversification of assets. And each thing has different benefits. Like investing in rental properties, you can treat it like a bank and take out tax-free loans and do stuff like that. Gold tends to be a pretty stable long-term asset that goes up. Bonds are guaranteed, so gold and bonds, if stuff hits the fan, they're still going to perform. The NASDAQ, the S&P have some of the most powerful statistical gains, yearly averages that of any other asset. Some of the most consistent. So everything has its purpose. It's not just one thing. That's dumb. You got to diversify into a bunch of different stuff. Anyways, chat, we got 4 minutes left, about 4 minutes left until we got PPI inflation data, retail sales data, jobless claims, unemployment filings. We got a whole bunch of stuff going live in about 4 minutes here, chat. 4 minutes. We have some very dangerous numbers coming out today. I don't know. We'll see. The poll's moving, though. High or low is pretty split down the middle, 34% to 34%. And it's jumping back and forth right now. So vote on the poll. We got about 1,300 votes. All right, guys. Hey, we got 3.5 minutes left. 3.5 minutes. Yeah, UNH is dumping down, man. Very weak right now. Here, I'm going to put the SPY up here, because I'm curious to see the reaction in like the SPY. Here's the gold chart. Here's the NASDAQ chart. I'll put it in full screen mode as well so we can kind of really watch it. Here's the NASDAQ. Let's see what this data does here. And again, hit the subscribe button, hit the notification bell. We cover this live for free every single day right here on YouTube. We don't sell a course, don't sell a service, don't claim to be good traders. Cover everything for free as soon as it happens. Subscribe, hit the notification bell. I appreciate it. Ooh, I was a little hungover when I woke up this morning, to be honest, guys. I was drinking soju, is what it's called, soju. It was good, but it's been a while since I drank. I wasn't ready for it. Ooh, got to drink that coffee this morning. NASDAQ's coming down here. We're at 2120s, or 21,250s. NASDAQ's falling down a little bit under the 200 exponential. We are at 21,242s here. We got 2.5 minutes, a little bit less than that. Again, hit the live button next to the play button. Make sure you're fully caught up on stream chat. We have about less than 3 minutes now. Yeah, so again, we're coming back down. We're at 21,250s. How would you invest 100 a week? I'd probably DCA. All right, a minute and a half, chat. A minute and a half. The timer says 1 minute, but it's really about a minute and a half left. A minute and 20 seconds now. Again, hit the live button next to the play button. All right, we got 1 minute, 10 seconds. Koreans could party. Yeah, I got a Korean friend. He's from Korea. Good dude. Really nice, kind guy. All right, guys. Hey, we got 50 seconds. 50 seconds. 45 seconds. I'm gonna pause this timer. All right, guys. 30 seconds left here. 30 seconds left. Hit the live button next to the play button. Make sure you're fully caught up on stream. 25 seconds. NASDAQ's bouncing up a little bit. Give me your last minute predictions. Yeah, we got Powell speaking again in 10 minutes as well. So just be ready here, chat. Be ready. We got Powell speaking as well. 15 seconds. 14, 13, 12, 11, 10, 9, 8, 7, 6, 5, 4, 3, 2, and 1. Here's the reports, chat. New York Empire State Manufacturing minus 9.2. PPI inflation data showed up 3.1% for core PPI. Regular PPI showed up at minus 0.5%. Minus 0.5%. Much more negative for inflation data than expected. Minus 0.5% versus 0.2% positive expected. Year over year at 2.4% for regular PPI. Jobless claims showed up flat at 229 as expected. Retail sales data showed up at 0.1% gain versus 0%. I think this is pretty strong data. Negative PPI inflation at minus 0.5%, 2.4% year over year PPI inflation data. Again, 2.4% year over year, minus 0.5% PPI inflation. Minus 0.5% PPI inflation. Better than expected here, chat. Better than expected. Again, PPI month over month showed minus 0.5% versus 0.2% expected here. PPI year over year showed 2.4%, better than expected. I think it's a 2.4% versus 2.5. Yeah. Wow. Again, better than expected PPI inflation data. Nasdaq's ripping up. Like I said, I thought this was good data. We went right up to that 3 level here, chat. Right up to that 3 level. Remember, guys, we do have Jerome Powell speaking live in less than 10 minutes. Jerome Powell speaking live, less than 10 minutes. So just be ready. We got Jerome Powell speaking live, less than 10 minutes. We're going to cover it live as we always do here, chat. Jerome Powell speaking live in less than 10 minutes. We're going to cover it live as we always do. So don't go anywhere. We're going to cover this live as it happens. Okay? Don't go anywhere. We're going to be covering this live as soon as it happens. Stick around. NASDAQ is flying up on better than expected data here. We will get this up on screen. Again, PPI month over month showed minus 0.5% versus positive 0.2% expected. Way better than expected here. Jobless claims flat. As expected at 228K. Retail sales showed... What did they show for retail sales? Retail sales showed up 0.1% versus 0% expected. All right, so here we got this stuff on screen. I'm gonna raise this so you guys can see all of it. That's basically all the stuff that came out today. Look at the market, love it too. I mean, a negative PPI inflation print is very good, very good. Again, do not go anywhere. We got Jerome Powell live. Yeah. Again, don't go anywhere. We got Jerome Powell speaking live basically right now. $8:40 Eastern Standard Time is when he speaks. So don't go anywhere. PPI data is out. Cool. All right. NASDAQ is flying up, guys. Look at this, 21.320s. 21.320s. Huge movements here. Chat, huge movements on the NASDAQ on this good economic data. You can see it all in big, bold, yellow letters here. You can see it all in big, bold letters here. Yeah, things flying up. All right, here, I gotta charge my headphones real quick before all right. Let me charge my headphones real quick. We'll split this over. Put these on. Y'all should still be able to hear the music though. And look at the NASDAQ fly up here, chat. Wow. So again, let's talk about Jerome Powell. Again, it's 8:40 Eastern Standard Time. We really got 5 minutes. We got 5 minutes left. So we're going to schedule this, put all this stuff up on our screen so we can watch this chat. But yeah, PPI inflation data better than expected here. And let's get ready. Jerome Powell live. Looking at our options here. Hold on, let me pull this up. Again, guys, if you want to help support the channel, check out Top Step. Top Step. If you want to learn to day trade, do not fund your own account thousands of dollars. You're probably going to lose it. Almost all day traders lose their first couple accounts. It just doesn't make sense to do that. Instead, try Top Step. They give you a 50K demo and you learn to trade in a structured environment. If you pass their test, they fund you 50K with a 90% split. Very similar to funding your own account. You get to keep your first 10K in profit prior to that split kicking in as well. If you fail, you're out $50 for the base one, you know, $100 for the middle one. It just makes sense, Chad. It just makes sense. No PDT in futures. You could day trade the S&P, the NASDAQ, the Dow, the Russell, gold, some currencies. Very similar to day trading stocks. Again, no PDT rule. They've paid out hundreds of millions. They fund thousands. If you use my link, go to TopStepX. 0 commission. No PDT in futures. Just a great way to learn. Just a great way to learn. I'll put the link in here. I get paid by them, so I'm biased, but I genuinely think it's good for traders. It's useful for traders. And so if you want to check them out, I'll put the link up. Here's the chat right here. And yeah, I'll pin it to the top of the page. There's the chat right there. I'll pin it to the top of the page. You can check it out. Great way to help support the channel here. I appreciate the love. And yeah, let's get ready for Jerome Powell here, chat. Let me replace. All right, there we go. Maybe he will announce the end of QT. I don't know. I don't know how much he's going to really talk about markets or influence markets. I really don't. We will have to see, but I don't know how much he's going to talk about markets, influence markets. I really don't know. So it's something that you always just got to be careful with and understand. Like, we'll see what happens, but I don't know how much he's going to speak on things. Yeah, it's going to be a framework review. All right, chat, we got 2 minutes left. Yeah, we got 2 minutes left. Just let me know once we get it started. Let me know if the sound is good.
As chair, Ben Bernanke led the committee through the creation of that initial consensus statement, adopting a 2% inflation target and outlining our approach to achieving our congressionally assigned dual. The framework laid out in that document broadly aligned with best practices for a flexible inflation targeting central bank. The structure of the economy evolves over time, and monetary policymakers' strategies, tools, and communications need to evolve with it. The challenges presented by the Great Depression differ from those of the Great Inflation and the Great Moderation, which in turn differ from the ones we face today. A framework should be robust to a broad range of conditions, but also needs to be updated periodically as the economy and our understanding of it evolve. From 2012 to 2018, the FOMC voted at each January meeting to reaffirm the consensus statement, in most years without substantive changes. In 2019, we changed that practice, conducting our first ever public review, and said that we would repeat such reviews at roughly a 5-year interval. There's nothing magic about a 5-year pace. We believe to reassess structural features of the economy and to engage with the public, practitioners, and academics on the performance of our framework. Several of our global peers have adopted similar approaches to their framework reviews. At the time of the last review, we had been living for about a decade in a new normal characterized by proximity to the effective lower bound, with low interest rates, low growth, low inflation, and a very flat Phillips curve. If I could capture that era with one statistic, it would be that the policy rate had been stuck at the lower bound for 7 long years following the onset of the global financial crisis in late 2008. After liftoff in December 2015, we were able to raise the policy rate only very gradually over a period of 3 years to a peak of just 2.4%. 7 months later, we began reducing it, leaving the rate at 1.6% in late 2019, where it would be when the pandemic arrived a few months later. Policy rates in other major advanced economies were even lower, in many cases below zero, and in all such economies, inflation regularly ran below its target. The sense at that time was that when the economy next experienced even a mild downturn, we would be right back at the lower bound, probably for another extended period. The post-financial crisis decade had demonstrated the pain that that could bring. Inflation would likely decline in a weak economy, raising real interest rates as nominal rates are pinned at zero. Higher real rates would further weigh on job growth and reinforce downward pressure on inflation and inflation expectations. Reflecting these concerns, we adopted a policy to make up for persistent shortfalls from the inflation target, an approach that was common in the extensive literature on the risks associated with the lower bound. Given the downside risks to employment and inflation from proximity to the lower bound, and the need to anchor longer-term inflation expectations at 2%, we said that following periods in which inflation has been running persistently below 2%, we would likely aim to achieve inflation moderately above 2% for some time. We also concluded that policy decisions would be informed by assessments of shortfalls rather than deviations from maximum employment. The change to shortfalls was not a commitment to permanently forswear preemption or to ignore labor market tightness. Rather, it signaled that apparent labor market tightness would not, in isolation, be enough to trigger a policy response, unless the committee believed that, if left unchecked, it would lead to unwelcome inflationary pressure. This change reflected our experience with long expansions that featured historically low unemployment amid low and stable inflation, suggesting that a policy approach that carefully probed for the maximum level of employment could bring about the benefits of a strong labor market without risking price stability. In the years just prior to the pandemic, for example, unemployment was at multi-decade lows while inflation ran below 2%. By December 2019, estimates of the longer-run unemployment rate had fallen sharply. The use of shortfalls acknowledged that a combination of low inflation and low unemployment does not necessarily pose an adverse trade-off for monetary policy. The economic conditions that brought us close to the lower bound and drove the changes in our consensus statement were thought to be rooted in slow-moving global factors that were likely to persist for an extended period, at least until our next 5-year review. And that might well have been the case had the pandemic not intervened. The idea of an intentional moderate overshoot proved irrelevant to our policy discussions and has remained so through today. There was nothing intentional or moderate about the global inflation that arrived a few months after we announced our changes to the consensus statement, and I acknowledged as much publicly in December 2021. We fell back on the rest of the framework, which called for traditional inflation targeting. Through the end of 2021, FOMC participants continued to forecast that inflation was likely to subside fairly quickly in 2022, with only a moderate increase in our policy rate. That projection was consistent with other central banks with different frameworks and the vast majority of forecasters. When the evidence showed otherwise, we hiked 525 basis points over a period of 16 months. The most recent data suggests that 12-month PCE inflation was 2.2% in April, far below its 7.2% peak in 2022. And in a welcome and historically unusual result, as this room knows, this disinflation has come without the sharp increase in unemployment that has often accompanied a campaign of rate hikes to reduce inflation. The economic environment has changed significantly since 2020, and our review will reflect our assessment of those changes. Longer-term interest rates are a good deal higher now, driven largely by real rates given the stability of longer-term inflation expectations. Many estimates of the longer-run level of the policy rate have risen, including those in the Summary of Economic Projections. Higher real rates may also reflect the possibility that inflation could be more volatile going forward than during the inter-crisis period of the 2010s. We may be entering a period of more frequent and potentially more persistent supply shocks, a difficult challenge for the economy and for central banks. While our policy rate is currently well above the lower bound, in recent decades we have cut the rate by about 500 basis points when the economy is in recession. Although getting stuck at the lower bound is no longer the base case, it is only prudent that the framework continue to address that risk. While the framework must evolve, some elements of it are timeless. Policymakers emerged from the Great Inflation with a clear understanding that it was essential to anchor inflation expectations at an appropriately low level. During the Great Moderation, well-anchored inflation expectations allowed us to provide policy support to employment without risking destabilizing inflation. Since the Great Inflation, the U.S. economy has had 3 of its 4 longest expansions on record. Anchored expectations played a key role in facilitating these expansions. More recently, without that anchor, it would not have been possible to achieve a roughly 5 percentage point disinflation without a spike in unemployment. Keeping longer-run inflation expectations anchored was a driving force behind establishing the 2% target in the 2012 framework. Maintaining that anchor was a major consideration behind the changes in 2020. Anchored expectations are critical to everything we do, and we remain fully committed to the 2% target today. In the current review, the committee is engaged in discussions about what we have learned from the experience of the past 5 years. We plan to complete consideration of specific changes to the consensus statement in coming months. We're paying particular attention to the 2020 changes as we consider discrete but important updates reflecting what we have learned about the economy and the way those changes were interpreted by the public. In our discussions so far, participants have indicated that they thought it would be appropriate to reconsider the language around shortfalls. And at our meeting last week, we had a similar take on average inflation targeting. We will ensure that our new consensus statement is robust to a wide range of economic environments and developments. In addition to revising the consensus statement, we will also consider potential enhancements to our formal policy communications, particularly regarding the role of forecasts and uncertainty. As we have been reviewing assessments of the 2020 framework and of policy decisions in recent years, a common observation is the need for clear communications as complex events unfold. While academics and market participants generally have viewed the FOMC communications as effective, there is always room for improvement. Indeed, clear communication is an issue even in relatively placid times. A critical question is how to foster a broader understanding of the uncertainty that the economy generally faces. In periods with larger, more frequent, or more disparate shocks, effective communication requires that we convey the uncertainty that surrounds our understanding of the economy and the outlook. We will examine ways to improve along that dimension as we move forward. So let me end by saying thank you again for being here. We've been looking forward to all of us have been looking forward to being with you today and having these conversations that will occur over the next 2 days. These discussions will help broaden and deepen our thinking about these issues, and they're critical to the success of these reviews. Thank you very much.
Okay, guys, so I am pretty sure that's it. Yeah, so I'm pretty sure that is it for that. Get ready. We're going to day trade the opening bell. So basically what we saw is that the market started to rise. If we look at the market up here, hold on. If we look at the market up here, market started to rise on this good inflation data. Like if we go up here, market went up on this inflation data. The market started to turn back down because Powell basically said in his speech just now that we'd probably have some supply chain shocks is what he said. I'm pretty sure that's what he said. And that is right when this market started to turn and come all the way back down. So just to put this into perspective, that is what happened just now. Market ripped up. Inflation data. I see Arian with the donation, brother. I appreciate the donation. Thanks so much. Yeah, I appreciate the donation. Basically, inflation data, PPI inflation showing up lower than expected, and an actual negative decrease, like a literal decrease in inflation, is a very optimistic sign for price stability. And in order for the Fed to cut rates, they need price stability. They need inflation to be under control, right? They need 2 things. They need inflation to be under control, and they need signs of economic weakness. Yeah. So they need signs of inflation being under control, and they need signs of economic weakness. And, you know, it's going to open the door to more of a green light to cut rates with PPI inflation and CPI inflation showing up a little bit better than expected. At the same time, now you can see the market start to turn back down here. So the market started to turn back down. We did have Jerome Powell just do a quick little speech here. He did talk a little bit about the economy, if you guys listened. And so, yeah, we'll see what happens, guys. We'll see what happens. But yeah, he did talk a little bit about the economy. Yeah. And so interesting here. Very interesting. And we'll see what happens moving forward, chat. Well, we really will. Like, it's a big day. The opening bell is here. We've had a lot of volatility. The market is essentially coming all the way back down, starting to turn all the way back down. And, yeah, it's an important day to just watch. Like, we got to watch. There's a lot of stuff happening. We had PPI inflation data release. Again, stick around. We are going to be day trading the opening bell completely live as we do. So, again, stick around. We will be day trading the opening bell live as we do. Powell just finished speaking. The rest of the conference probably going to be kind of boring, so I'm not going to cover that because Powell's done, and most people are just tuning into what Powell says. And so just stick around, be ready. We did have PPI inflation data release here, chat, so we did have that come out, and then we are going to be day trading the opening bell. And again, if you want to help support the channel, check out TopStep. TopStep gives you a 50K demo. They test your skill in day trading. We've been day trading for the last few days. Again, they give you a 50K demo. They give you a 100K demo for the middle price package. They give you a 150K demo for the top one. If you can pass their test, and this is a much cheaper way to learn. Most day traders lose, right? So if you put up the money yourself, you're probably gonna lose. Most day traders lose. It's the best way to learn. And so the base one's 50K. It's $49 a month, and you can make 3K in profit on that 50K demo without losing 2K first. 3-to-2 reasonable ratio. Following their rules, they fund you 50K with a 90% split, and they pay out hundreds of millions. I think in the last couple years, they paid out hundreds of millions of dollars. If you fail, you lose $50. Very similar split to funding your own account. 90% first 10K in profit. But in my opinion, much less risk, right? Great way to learn. Most day traders lose money regardless of where they trade. And so if you want to check it out, it's just a beautiful way to learn. In the futures market, you could day trade the S&P, the NASDAQ, the Dow, the Russell, gold. If you go to my link, use TopStepX. Their new dashboard gets you payouts quick, instant, almost instantly. A great way to do it. And again, use TopStepX in their new dashboard if you want to check it out. I'll put the link up one more time. And again, stick around. We are going to be covering... yeah, we are going to be covering all this stuff live, basically, as soon as it happens. We had just so much stuff that came out. Honestly, I'm surprised the market didn't hold better here, to be completely honest. I'm surprised the market didn't hold better. So we'll see what happens, but yeah, I'm surprised the market didn't hold better. All right, we got this going live. We had the inflation data. Downloads. Stick around, chat. Again, we are going to be day trading the opening bell live. Where did my inflation data stream go? Market. There it is. All right. All right, we're right at the 200 exponential. If we take a look at like gold, I think gold's an interesting one to look at too. Powell said some stuff regarding inflation. I'll catch back up on the chat in a second. But you can see all the stuff that came out right here. You can see all the stuff that came out. Gold is ripping up this morning, up to almost 3,200. It did dip down a lot though. Like if we look at gold, it's down a lot over the last week or so. I'll cry about a CD. I've never seen you before, brother. Oh, yeah, let me get the music up. Let me get the music up. Hold on. Here, let me turn this music down. I had to turn Powell up because that's what we do for you guys. We turn, you know. Okay, let me know if the music's too loud or if it's good right where it's at now. And yeah. So we don't really have... We got industrial production numbers that go live at 9:15 market time. So in like 20 minutes or so, we got industrial production numbers. I don't think these are really going to move markets, though. I just don't think they're going to move things. I think they're going to be pretty boring. But the market's already kind of volatile as it is right now. So it's pretty volatile as it is. Yeah, it's just pretty volatile as it is. So just be careful. Silver's green too. Yeah, I mean, the Fed and politics and the government are just different entities. So like the Federal Reserve, while it says the Fed, is not actually the government. Just to put it into perspective. So. Yeah, bond yields. Let's take a look at bond yields. I'm sure on this data, bond yields might spike up a little bit. And yeah, that's what they did. They spiked up a little bit on Powell. Yeah, and I mean, inflation data, you would think maybe bond yields would come down because yields and interest rates tend to parallel each other. But they're up a little bit. Mostly probably on, they're kind of flat overnight, though. They're already up a ton, bond yields are, over the last 24, 48 hours. All right, guys, we did a poll. We asked people, are you bullish or bearish on today's market open? 67% are bullish, 33% were bearish. Yeah. Also, guys, do me a favor, hit the subscribe button. Like, we cover all this stuff live as soon as it drops. We cover inflation data. We cover everything live as soon as it happens. So if you haven't already subscribed, hit the notification bell. Give me a follow at Beginner Trades on X. At Beginner Trades on X. Great way to help support the channel. You can also support our free Discord. Doesn't cost anything. You can hang out with us after the stream ends. Here's the link to our Discord right here. Definitely help support the channel by joining this right here. Check it out. There's the link. I appreciate the love. I'm going to buy the dip and sell the rip today. Pretty good news. Yeah, we're going to be trading the opening bell live. I kind of want to buy this dip. But yeah. So we are trading our challenge account that we're in. We just took half off here and we're up a really nice couple $100. We're now up about $400 on this account for the day. I'll show you guys this right here. I'm gonna cut that right there before it retraces back. Yeah, we're still up 400 bucks on the day. We ended up getting green here, buying the 200 exponential. You can see the trades we've made on this. Like very small losses, big wins. Like look, this is Top Step X right here. $10 loss, $140 win, $140 win, $5 win, $120 win, flat, 0 losses, $185 win, $200 win, $85 win, $135 win, $55 loss, $15 win, $55 win, $45 loss, $15 loss. And so you can see mostly green. We've been kind of buying dips on the strength that we got from PPI inflation data is kind of what's been going on. So, and again, this is a challenge account, so we're trying to get funded in their new dashboard. We've got 2 other funded accounts that we've been playing on. And yeah, that's kind of where we're at now with this thing. How you guys doing today? Y'all red or green? Hey, thank you. Great channel. Thanks for the great content. Thank you so much. Appreciate it. The only difference between, yeah. I mean, there's a lot of differences and stuff going on right now versus back then. So he basically said something that I always talk about, which is that in 2020, the Fed brought interest rates down to almost 0. We had supply chain problems, a lot of stuff signaling weak economics. And so Fed cut rates, did quantitative easing, money printing, created a bunch of online bank reserves and money printing, and then used that to buy up bonds, inject liquidity into the bond market, trying to help bring interest rates down in a more desperate way. QE is a more desperate thing than just straight up cutting rates. Like if they really want rates to go down quick, they'll inject liquidity into the bond market. It'll dump yields, dump interest rates. That's what QE is. But the consequence of QE is inflation, right? We also had supply chain problems, which caused inflation. We also sent out stimulus checks, which caused inflation in 2020, right? All of these things combined made, by 2022, we had inflation problems, right? Inflation spiked up to 7, 8, 9% in some metrics. And so then the Fed gets really hawkish. And as Powell said, they hiked rates 525 basis points starting in 2022 to combat inflation. And it worked. We got inflation slowing, all the way down to where we're at now, with CPI inflation showing up at what was it, like 2.4% or something like that, I don't know what it was. We had CPI inflation showing up lower than expected on a month-to-month reading and year-over-year reading as of now, right? But we still got the high prices. Prices don't actually go down very often. We had PPI inflation data actually go down month to month, but outside of recessions and depressions, getting significant drops and literal drops to inflation is very rare, right? The best the Fed can do is try to slow it down. And that's what a hawkish or restrictive Fed does, is they're trying to push inflation down by restricting the economy. When interest rates are high, people tend to spend less. Businesses expand less. They tend to spend less and expand less. And you know, they also do QT, which is restricting liquidity from the bond market, causing yields to go up and bond prices to go down, right? Because they have less liquidity in the bond market, if this makes sense. And so it's nuanced, but it's understandable if you kind of understand to track all this stuff. This is why I look at bond yields, right? Bond yields, you can look at it through TNX. You just move the decimal place over once. They're kind of flat. Like here's where we open, and that's where we are today. So we're kind of flat in bond yields. But you can track bond yields and see what's going on. And again, guys, if you disagree with anything I said, explain it. Explain why you disagree. I'm open to hearing it. Maybe I'm wrong. Correct me if I'm wrong. Generally, what happens is I say inflation slowed down, and people are like, oh, bro, what are you talking about? Prices are still high. Yeah, they are, because prices don't really go down. They slow down. And so we're stuck with them. You know, people are still unhappy about the inflation spikes that we got 3, 4, 5 years ago. That's why people are unhappy. Doesn't mean inflation's not slowing. It means people are still unhappy about the original hikes to inflation in the first place. So, just to clarify. Yeah, and I don't know. At this point in time, if we look at rate expectations here, chat. If we look at rate expectations, 92% likely that we're going to pause rates in June. 92%. 8.2% chance of a cut in June. And the only way we're going to get this cut right here, this 8.2% chance, the only way these odds are going to increase is if we get super weak economics and really low inflation, right? If the economy weakens and it's obvious and we get like negative GDP or super high unemployment spikes or super low payroll numbers, then these odds of a cut in June are going to increase. But for now, we got about an 8% chance of a cut next month in June. If we look at July, it increases a little bit. And again, this is all because inflation data could change. Still only about a 36% chance likelihood of a cut in July. As of now, it's looking like September is when we're going to get our first 25 basis point cut. A little bit over 50% chance of that. But in that regard, we still only have a 27% chance that, or we also have a 27% chance that we're not even going to get a cut by September as of now. And so when we're going to cut rates is looking far and far out. Even though we're getting low inflation data, I think the argument is going to be we don't have weak economics to justify rate cuts. So I don't know. And it's a nuanced thing, right? People that don't really understand things, like if they hear me say inflation's slowing and then they're looking at prices and prices are still high, they might say, nah, bro, what are you talking about? But again, inflation slowing is the key word there. It's not literally going down. PPI actually literally went down month to month. Came in at minus 0.5%. We went down 0.5% in prices for producers, wholesale inflation. So that's good, honestly. That's why the market ended up ripping up. But it's very nuanced. And again, stick around, hit the subscribe button, hit the notification bell. We appreciate the love. Again, retail sales data came in a little bit better than expected as well here. Oof. I'm gonna buy this dip. See if we can get anything here. I'll put this up so you guys can actually see it. I'm bullish right here, but like, I can't hold it too long. We got a cushion on the day though now. I'll maybe take two contracts max. Actually, I'll just take one and maybe we'll add to it. And there we go. I'm gonna add to this here. So we tapped my level. There we go. We're gonna take half off there, lock that in, and get out the rest there for another 125 or so profit. Up about 5 on the day. That's nice. All right. We got 25 minutes until the opening bell, chat. 25 minutes. All right, so China is going to tighten control over AI data centers according to the information as well. Marks and Spencer says product availability is looking better every day. Comcast CFO says Park's business has shown no sign of impact from economic uncertainty in one of their conferences. Looking at our poll number, 67% are bullish into the opening bell today, chat, so stick around. Bullish all day? Maybe. Yeah. Possibly. We will see. All right, look at the market bounce back up. Again, we're still riding up this low inflation print that we got. We tapped that 307 level, but now we're dipping down to 300s. I guess I'm bullish today just because of the strong economic reports that we've gotten. But I do want to wait. All right, so the president's trade battle risks causing capital flight from the U.S., according to Financial Times. Citing an Elliott management letter to shareholders, the president's program could tarnish the U.S. dollar's appeal and allure of doing business in the U.S. We also had Phillips 66 announcing an agreement to divest majority of interest. Hey, thank you for the donation, mister. Appreciate it. Thank you, sir. What news? Let's see. Coinbase suffers cyber attack as overseas employees. So yeah, a couple people talking about bond yields are going down here though. So look at bond yields going down. That's good. Coin down pretty big today from 260s down to 250s. They said clients were already informed of the breach, which may cost it up to $400 million based on current estimates. They say customer passwords and private keys were protected by its system, and at no time were any of the targeted contractors or employees able to access customer funds. So Yeah, so hedge fund Elliott says the trade battle risks U.S. capital flight. We also had news that China's going to tighten control over AI data centers. All right, guys, we got 20 minutes left, chat. 20 minutes left. Stick around. We're going to day trade the opening bell live. I tend to be bullish, but at this point, we're close enough to this top where I want a larger pullback. I could also buy 305s. I'd rather buy 300s here. So I'm going to wait for a 300 dip and attack that if we get it. You guys red or green? Chat, red or green right now? What's up, Sam? UNH got dumped on a lot of stuff. Basically, UNH had bad earnings. Reported around mid last month. They had CEO drama that happened over the last couple days, and just a lot of bad news that's happened for UNH over the last week and a half. So they are down almost 50% from highs. Basically 50 in some areas from highs they're down over 50% right now. They're down to 308s. Highs were 630s. So that is over 50% drop for UNH. Just doing really, really bad. Super big dump. Like, look at the daily chart on UNH. It's horrible. Look at this drop for UNH. Dumpster fire. Yeah, bad news for sure. All right, chat. Sitting tight, waiting here. Again, if we get a dip down to 300s, I'll buy it up short term. But I need a dip down there. And I think I have to have a tight risk too, because I think if it drops under 300, it's going to look like a lower high. And so I'd rather not mess with it. But I'll buy 300 if we get it. It's you, Finn. I can track my kilobits per second, and I'm running 4600 clean and stable kbps. Yeah, I mean, it's you. No offense. Hope you understand. Sorry, I just put the I'm checking my CPU usage. Yeah, it's under 15%. Yeah. So it's all love, but it's you. So we never quite got a dip down to 300 that I'm waiting on here. And good news for stocks, Palantir up to almost 130. Nvidia ripping up this morning, or no, ripping up over the last 24 hours, I should say. Down a little bit this morning, but at 135s for Nvidia. Very strong movements there. United Health, obviously dumpster fire right now, but Powell basically said he thinks we might have supply chain shock sometime soon. But he is like in his biggest post, I think. Wasn't anything huge, but it's what caused this drop right here. All right, let's see if we can get 300s. Hey guys, what do you think about gold? I've said gold. People ask me about my gold thesis more than anything else. I like gold long term. Short term, it can be risky, and short term, over the last 10 years straight, it's been on a long term upward trend. And so in that regard, I'm not super interested in buying gold right here. All right, so the India Trade Secretary says the Indian team is slated to visit the U.S. to take trade talks forward. This is some big news. You can see that news posted there. We'll also post it on our X page. We tapped 300. I wasn't looking, guys. I wasn't looking. Oh, do I want to buy it now? Kind of. Oh, dude, I'm a little frustrated. I wanted 300. Remember, I said this over and over again. I wanted this. Look at that. We bounced literally right there, right at it. Now I'm kind of chasing it a little bit. We might get a different ad position, but I'm still mad. I could have had 300 exactly, and it would have been a beautiful trade. We bounced literally exactly off of my line right here. As young people say, I'm now low-key mad. All right, we did have capacity utilization rate show up at 77.7 versus 77.8, basically flat as expected for capacity utilization rate. We had manufacturing output show up at minus 0.5% versus minus 0.2% expected. So we did have some economic reports show up today just now. What I'm showing here for these reports, hold on. Wait, sorry, wrong button. But again, we did have capacity utilization rates just show up. We showed up, again, 77.7, a little bit under expected, but basically flat. Industrial production was low also. It came in at 0% versus 0.2%. So basically flat manufacturing output data. No cap. As young people say. I'm old, bro. I can't say that seriously. I feel bad. My daughter would make fun of me if I did. So anytime I say it, it's got to be ironically. All right, so now we're turning all the way down. I missed the bounce. I got to just cut it. It's all right. We're still very green on the day. I wanted this level right here. We bounced right up to this level, and now we are dumping down. Look at this drop. Wow. Again, just to clarify, we are still green. Look at the green up there. If you can see it, we're still green. What is going on right now, bro? We already had the capacity, the utilization rate, manufacturing output. Do we have some news? Let's check it out. Something's going on. All right, so there's a... Yeah, we got industrial production capacity utilization data. Maybe it's just weird market dynamics. I'm gonna buy this up here. We're right back at my 300 level. I'll take another shot at it. We're gonna take one contract here though. Yesterday, after the opening bell, and at least one of ours, we didn't have any losing trades. So I tend to do better after the bell, I think. All right, we're kind of flat on this position now. There we go. Now we're kind of green. We got a nice little stop loss level right around where we're at now, too. So. Yeah, we're going to cut this too. I'm going to wait now. I don't want to give too much back. We're still very green on the day. Over 1,500 in this account, so. Yeah, if you want to rewind it to about 8:40 market time, which was, yeah, about 40 minutes ago. That's when he spoke. We covered it live. We streamed it. Yeah, and we'll switch to our funded account so we can actually trade it at the bell here. Oh, let me make sure this is the right one. Yeah, this is right. Okay. Yeah, so this is our actual funded account. We'll keep this one up. Look at that drop. Wow. Turn. We got 10 minutes, a little bit less than 10 minutes actually to the opening bell. Alibaba, I think Baba had earnings this morning early, and they did not like the earnings for whatever reason. They just reacted negatively to their earnings. So. Here, we can put this one back up now. Look at this. So we're up about 20 ticks, about another $120. Just made everything we lost back over that last trade or two. About 400 on the day here. I'm going to switch back to my funded account though, because that's what I want to trade at the opening bell. Just want to show you that trade real quick. Again, guys, I don't even claim to be a good trader. Just kind of hanging out, trading some stuff. We'll see how it goes. We got a nice little cushion to start the day. What do you think about Palantir? I like Palantir as a company. I think Palantir will probably go up long term. Short term, you never know. It's got a really high PE ratio, but I'm optimistic about it. Who knows? Might crash tomorrow for all I know, but I tend to like the company. Don't copy me. Not an investment professional. All right, Chad, here we go. We got 7 minutes left to the opening bell, about 7 minutes. India Trade Minister source says India remains competitive as a smartphone manufacturing hub, and Apple is likely to take their own decision. Yeah, I mean, my strategy is very simple, guys. Number one, I'm looking at longer term time frames on different monitors. I'm showing you guys the shortest time frame because y'all are watching price action. Typically, I have different milestone levels that I look at on my charts. Here's one of them, the 200 exponential. I look at kind of basic support and resistance around it. I like looking at quarter, half, and whole dollars as well. And we'll trade like the range around it like this. So an example, we break under here, we rebound back, we'll attack the range down to this. And vice versa. Technically, this is kind of like an upward long trend. We held at the 200 EMA, so I've been kind of buying dips and trying to ride them up to their respective levels above them. Looking for pivots and then rebounds and then pivots and rebounds. It just depends on what happens, so it's kind of a whippy few days. Yeah, PPI was good. It was solid for sure. Nvidia doing good. Nvidia, a lot of this is influenced by blue chips and other stuff. Yeah, UNH is still coming down. When you were younger, was YouTube and trading your main goal? I don't know. I got really into trading in like 2015, 2016. And I started just kind of documenting my trading on YouTube. And yeah, eventually it just kind of grew to where it's at now. And it's a blessing, you know, fun community. Yeah. It kind of goes to show you can tell people you have no idea what you're talking about and still grow. So, yeah, I think the 200 exponential on a 1 minute chart's the most valid. You could use it on a 5 minute, 15 minute, whatever you want, but like, look. So let me show you what I mean. So I'll take this away for a second and show you guys on toss. Okay, so here's the NASDAQ. All right, this yellow line is the 200 exponential. Like, look. Let's find. So this is like super early or super late price action. So we're gonna zoom in here. But like, look at it. 200 EMA, 200 EMA, 200 EMA. When we finally rip over it, look at what happens. Hold, hold. We finally rip back underneath it. This is kind of volatile action ahead of PPI, but hold. Like, you can see how much it respects the 200 exponential on a 1 minute chart. Now, you can put it on a 5 minute chart or use whatever you want to use. I like the 1 minute chart. Everybody's different, and trading is very subjective, meaning opinionated, and people are different. People like to use different things. It varies a lot. But yeah, I like it on a 1 minute chart personally. I also look at stuff on a 5 minute chart. Again, I've got a lot of stuff that y'all can't see underneath. I've showed people it before. I'll have to show it again one day, but yeah. Everybody's different. How's the tariff battle treating y'all so far? Honestly, it's helping me personally because I run a market. I run a finance media company, and so in that regard, it's been great. Like, my viewership has doubled in the last month and a half. It's kind of what happens though. You cover big market catalysts, people tune in, that you grow. Like, that's how it goes. Amazon's looking weak right now though. Amazon's breaking down. Look at this. And so again, like, look, big milestone level, 200 exponential here, rebound back up. Where do we stop? We stop at this level too. Even if we continue up, I like to use the levels as kind of guides in the trade. Give me like ranges, risk reward areas to attack. Hire me? No, I'm good. I don't like hiring anybody. Some of the biggest haters I get, right, are people who have either tried to grow a following and they want to be my best freaking buddy, my best freaking friend. You know, let me be your best friend, bro. And then as soon as I recognize, I'm like, hey, like, this person's just fake. Like, they're full of crap. You know what I mean? Like, they just want to grow off of my back. I don't really know them like that. They're just trying to get me to promote them. And I start to take a step back. Then it turns like resentful. Some of the biggest haters are people who have tried to grow a following and failed at it and want you to prop them up. And then when you don't, they just lash out. Some of the biggest haters in the world. That's kind of where they come from. All right, guys. Hey, we got 15 seconds. And so because of that, I'm not really interested in like collabing or doing anything else. It's just too much. 10 seconds, chat. 10 seconds. There's the opening bell. We tapped 307s, going down to 300s, rejecting here. Look at this. So we're coming back down to that 200 exponential. I'm trying to see what stock is falling. Amazon falling fast at the opening bell. It's down to 205s. Tesla dipping down to 230s at the opening bell. Nvidia flat. Palantir is actually up a little bit since the open. Y'all are my online friends, guys. You guys know. Top 3 online friends in the world right now. Amazon dumping down, Nvidia dumping down a little bit, causing this big contraction in markets. I kind of want to buy it up though because we had good inflation data, but I think it's risky as well. So I kind of want to buy it up. You know what? I am. Just made $130 on the other account. And now we're back down. I don't know what I want to do here. I still kind of want to buy it up. Look, here's the 200 exponential right here. Look at that bounce. All right, we made another couple $100. Again, guys, where do we bounce? We might continue down here, but where do we bounce, guys? The freaking 200 exponential moving average on a 1-minute chart. I'm not going to say you're welcome, but you're welcome. Don't copy me. I have no idea what I'm talking about. Anyways, we bounced right here at the 200 exponential. Now we're starting to rip up here. And Palantir, almost up to 129s. It's way too early for me to really trade in my funded account, though. I'm going to wait a couple minutes, let things play first. Microsoft going up. Amazon heading down here. Okay, yeah. So here's what I see. Like people are always so mad. They're like, oh, bro, you know, this is the only chart you're looking at. Like, dude, this is my background. This is my office right here. Don't mind the mess. It's a little messy, but like I'm using like a lot of different things. Like that is my bottom monitor right here. It's a 49-inch ultra wide. So the point is I got a whole bunch of charts and stuff that y'all can't see. Look at the market fly though. Markets rip it up. Top 3 least knower of what I'm talking about in the world right now, Ace. Top 3 least knowing. Market just broke highs of the day. SPY ripping up to 586s. Nvidia testing highs as well. I think Nvidia wants to go green on the day is what it looks like to me. But again, I'm going to let things play out first. Oh, Steve? Y'all are talking about Steve? We affectionately refer to him as, I think it's Steve. Steve right here. The GOAT. It's a bear obituary. That's what that is. His name's Steve. All right, guys. NASDAQ's flying up. We're at 21 threes right now. 21 threes. Really, we're in a big ranged, or a big range sideways trend here, though. It looks bullish, though, to be honest, but you never know if we're going to come right back down. And testing highs again. Steve's goated. Yeah. I'm not going to add any more. I don't need any more monitors personally. Like, look, like this monitor is so, like, it's a 49-inch ultra wide right here. So I just don't need more than that. Like, it's big enough, to be honest. Like, it works. It ends up working out. But all right, chat. We're now about 5 minutes after the opening bell. I'll look for a dip to buy if we get one. We'll wait though. You guys red or green so far since the open? Jerome Powell, is that his cousin? He asked Steve if he should cut rates. Is that his cousin? Steve Powell. Tesla up to 240, 342s, but a big turnaround here, man. That's a big drop for Tesla. Look at this drop. That's a crazy quick drop here. Look at Tesla. Look at this reversal. Candle right here. It looks really strong, and then boom, big size unloaded right there at the top. Same thing with Nvidia. Nvidia started to turn too. Look at this. Now it's retraced all the way back up. This is very weird. I'm waiting. Do you think the stable job market and lower inflation would defiantly force Fed to cut in the upcoming months? People have this misconception a lot, guys. Listen, the Fed does not want a stable market to cut rates. They do not want a stable labor market. That's not one of the conditions they need to cut rates. One of the conditions they need to cut rates is a weak labor market. If the economy turns negative, they might want to lower interest rates to stimulate it, right? Like, why do they lower interest rates to stimulate a weak economy, a weak labor market? Because by interest rates going down, businesses have cheaper access to leverage, money, loans. People have cheaper access to leverage, money, loans. They expand their businesses. They can hire more people, and thus it stimulates the economy. They tend to spend more when interest rates are low. If interest rates are high, they tend to spend less, and it combats inflation, right? And so if you want to cut rates, you need a couple things. First one is a weak economy and a weak labor market. You need justification to lower interest rates. Second thing is you need inflation and price stability. If inflation's under control, you get more of a green light to cut rates. But again, you need a weak economy, a weak labor market. It's not a strong, you don't want a stable labor market to cut rates. You want a weak one if you want rate cuts. Just to put it into perspective. Hope that makes sense. All right, so market's turning right now. Let's see if there's a reason for it. Yeah, I don't see any news to cause this. I think it's just turning of markets. Yeah, it's all good. I mean, I'm trying to help, Martin. So it's all good, bro. I just hope people understand. People get this wrong a lot when I'm talking to them. Like, they think you need a strong labor market to cut rates. It's the opposite. It's not that you need a weak labor market. It just makes a lot more sense stimulating the economy when things are weak and need stimulation, versus if the labor market's strong, it means a couple things. It means inflation might be a problem because people are spending and working and spending and working, and that makes prices go up. And that means that we're less likely to cut rates because inflation is then, it's more weighted to risks of inflation than it is to risks of economic weakness if the economy's strong, if that makes sense. All right, so very flat open, very kind of rangy open. I kind of want to buy this dip. We'll try buying it right here. One contract though, very small. All right. Oh my gosh, okay, we're gonna cut that too. I don't know what I just did. I double clicked it. Oh, you guys can't see this. Okay. Oh my gosh, dude. I've been trading the wrong account. Oh my gosh, dude. Hold on, wait. Yeah, I've been trading the wrong account. I'm green somehow, bro. Ugh, dude, I've been trading the wrong freaking account right here, man. I'm currently processing a payout in this account, and I'm not supposed to lose money. And so, yeah, I've been trading the wrong account, guys. No wonder you guys can't see it. Things look weak right here, though. Dick's Sporting Goods expects Nike to grow at Foot Locker. We're breaking down. We're looking kind of weak right now in markets, but we're also about to tap the 200 exponential. I don't like the retest of it, though. I think the retest is bad. We just retraced all the way back up. Look at that. Weird. We have retraced all the way back up. Very whippy market right now. Let's see if we pop right back up here. It's very strange. Alright, so we will start trading this account here. Let me make sure it's the right one, dude. Hold on. Okay. Okay, this is the one I want to trade. I'm gonna buy one micro contract here. Oh my gosh, there's a regular NASDAQ contract again. Alright, I'm out. I'm just messing up right now, dude. Should have held that position. It would have worked, but I'm meant to be buying micro contracts here. I do not want to buy regular mini contracts. It would have worked perfectly too, though. Ugh, kind of hurts a little bit, but that's all right. Yeah. I'm going to buy this retracement back down, see if we can get a pop back up. I'll take two. This is so volatile. Look at the range right now. We don't have any economic reports at 10, do we? I'm gonna cut half of this. I just don't like this at all. It's too rangy, honestly. We're down like 20 bucks though, so it's not anything, but that's better. We're basically flat on the day now. Okay, green. We're so rangy here though, man. I'm gonna cut this. It's just the range is way too big. So we're essentially flat on this account for the day. It doesn't matter too much, but I'll switch to this one and we'll play a little bit on our combine account. While the range is big and risky. I wanted to jump in a little bit late, but that's all right. Problem is these candles just whip so fast on the upside or downside here. So trading in mini contracts right now is a risk for sure, chat. Just be careful. We're switching to a combine account because the range is a little too just crazy. All right, we took half off. We're up about 190. We'll take that off there. Be careful. We held really well. Again, just to put this into perspective, chat. We pulled back to what level? The 200 exponential. Held there again. This is why I watch it on a 1 minute chart specifically. For whatever reason, on a 1 minute chart, it holds. Not every time might dump underneath it. Who knows? But it's a pivot point. It's a milestone area on that chart, if that makes sense. Powell already spoke. He spoke at 8:40 Eastern Standard Time today. Yeah, I mean, I'm doing pretty well. Look at this. Look at this green on this thing. It's been a crazy morning on it, but bullish. Bias is bullish. Good inflation data. Pretty decent data everywhere else. So, Yeah, UNH is chaos right now, though, bro. Again, if you want to check out Top Step, great way to help support the channel. No PDT in futures. You can day trade the S&P, the NASDAQ, the Dow, the Russell, gold, some currencies. Just the perfect way to learn day trading when most day traders lose money. You're still risking something. The base one's $50 a month, basically, after tax. No PDT in futures. You can day trade the S&P. I'm going to buy this dip. You can day trade the S&P, the NASDAQ, the Dow, the Russell, gold, some currencies. And we're going to get out there again. No PDT rule. You can see how similar this is to day trading stocks. Like, look at this level hold. You can see how similar this is to day trading stocks. No PDT rule in futures. The perfect way to learn. If you pass it, 50K funded account, 90% split. Similar to funding your own account in terms of split. You get to keep your first 10K in profit. They paid out hundreds of millions of dollars. If you fail, you're out $50. Not the end of the world. And there's larger packages as well. This is just the base package. It just makes sense, in my opinion. It just makes sense. Learning this way in a structured environment where you're risking something and you're learning how to trade with risk, but you're not risking 5, 10, 20, 30 grand like a lot of new day traders end up doing and losing. Top Step X, 0 commission, so it's an even better way to learn. If you go to my link, use Top Step X, 0 commission, tiny amount of fees per trade, especially with micros. Check out the link right there. There it is. Great way to help support your favorite doesn't know what he's talking about trader out here on these YouTube streets. Market's starting to break down a little bit here, though. We're at 21,285s right now. I'm not messing with this. Look how big the range is in these candles. Like, I got out just in time here. Look at how big the range is here. This is the third test of the 200 exponential. It looks weak, to be honest. Nvidia has broken all the way down here. Look at Nvidia falling. I'm not going to buy this dip because either some bad news just happened or the market just got really red all of a sudden. So just be careful here. I'm not buying this dip. Looks too weak. Nvidia is what's driving this down. I think Nvidia just super dumped on the downside. Let me see if there's news. CoreWeave shares fall pre-bell. Disclosure of Q2 capital spending. CEO says the company is set up for an amazing year. Demand remains exceptional. But I think that's negatively affecting the chip industry and the sympathy regarding chip stocks right now in the market. The mean streets of YouTube. All right, guys. Hey, we're rebounding a little bit. I could short this. I should have shorted it. Looks like Palantir breaking down a little bit as well. Yeah, we got some data that comes out later on today, guys. We have business inventories in about 12 minutes at 10. We had Atlanta Fed GDP a little bit later as well. Tesla coming down, Nvidia coming down too. 275s. Why did you short when we got to 21,320? Here. Yeah, I mean, because we're over the 200 exponential, and the trend's looking more bullish there, and I try not to trade against the trend. Like, I'll take some dumb trades early in pre-market, but once the opening bell happens, I try to trade with the trend. I'm not always good at it, but I try to. Ugh. Here's the 200 EMA right here, 280s. I kind of want to short this, but is he dovish or hawkish? I think he was kind of in the middle. I saw him a little bit more worried about supply chain shocks, is I think something that he said. So Powell's already spoken. He spoke at 8:40 this morning. It is now 9:50. He spoke an hour and 10 minutes ago. I will try to short this. There we go. All right, we'll just made a very quick $100 bill. And this is a challenge account, so it's a little different, but the move happened very quickly here. If we get up to here, I'll short this real quick too. It's a big green candle though. We'll let it test this resistance and get out. Yeah, I gotta cut that. That's a big move up. We're still green $400, $500 in the day, but it's so whippy right now, Chad. Just be careful. Nasdaq's fighting back. Microsoft basically flat though. Nvidia's rebounding back up is probably what's driving this. We might get a rejection here because of Nvidia hitting the VWAP right there though. Sorry, I know my typing's loud. Top 5 fastest typers. Look at the market completely retrace all the way back to the upside. All right, big retracement back up. Looks bullish though, but we're so choppy and flat right now. I will buy this. I want to be careful not to overtrade right now. I'll take 2 contracts here. There we go. All right, we took a piece off of that. See if it continues up. There we go. Not a lot, but we can hold the rest break even now. Quick turn to the downside. We're out. Basically a flat trade. very whippy at this point. We're green on the day, though. I mean, look. So now we're right back up. We'll switch to our actual challenge, or our actual funded account, and trade that now. See if we can get some good trades. Trying to make sure I'm trading the right account. Express, I think that's right. See, now we're flushing back down again, man. Weird, dude. The market's so whippy right now. We're hitting that 200 exponential again. And Nvidia hit the VWAP here. So flat, weird, strange. I wanted to buy this dip too. Where do we bounce again? The 200 exponential. It doesn't bounce there every time, but it bounces there enough to like the entry. What a drop here, dude. We are going up big, down big in a range. Y'all be careful, man. Look at this range. There's the 200 EMA again. The problem is Tesla's kind of turning down to the downside here is what it looks like to me. Tesla coming down. We got 3 minutes until. I don't think we have any big major data showing up. But supply shocks. Yeah, I don't know. I think the market already negatively reacted to it. So I will try to buy this dip. 1 contract, micro contracts. We'll take 2 here and that's it. But it's such a whippy market right now. I gotta be careful. Oh my gosh, dude. I'm trading the wrong contract here on my funded account again. It's like the 3rd or 4th time I've done this today. Alright, so I'll show you guys this. We're in micro NASDAQ contracts here. Up about $70. We'll take a little bit more off here in our actual funded account. We're now up about 70 on this account on the day. So we're up in both funded accounts we got this morning. I bought the 200 exponential dip again, but the market's honestly really whippy and difficult to trade right now. Microsoft is up to 450s. Nice. There's 9 a.m. We had some economic report coming out today at 9 a.m. It was business inventory showed 0.1 versus 0.2. Retail inventory showed as expected, basically nothing for today's economic reports at 10 o'clock. Very boring. Not a lot going on. US NAHB housing market index showed up at 34 versus 40. Expected 34 versus 40 expected. Hey, later, R. Have a good day, bro. Palantir just ripped up. We got a lot of strength showing up in markets too. I'm probably just going to cut out here green on the day. Tomorrow we got the University of Michigan Consumer Sentiment and Inflation Expectation Report. That's at 10 o'clock in the morning, so basically the same time right now tomorrow. We got a decently big report. We'll see how much it moves markets. We're going to get inflation expectations by the University of Michigan 1 year and 5 year, as well as consumer sentiment data at 10 o'clock tomorrow. We'll stream it all live as we always do. So just be careful, guys. Hit the notification bell. Hit the subscribe button. I appreciate the love. Again, we're day trading on Top Steps funded account program where they give you a 50K demo. They test your skill with the demo account first, and then if you pass that test, then they fund you between 50 to 150,000 with a 90% split. Pay out millions, fund thousands of traders every year. Great way to learn because you're learning in a structured environment. You're still risking something at base one's $50 a month basically, but if you fail, it's not the end of the world. It's really good for helping new traders learn how to day trade, and if you're a good enough trader, you can withdraw and fund your own account after building up profit. And again, the profit split once you're funded is 90%, and you get to keep your first 10K prior to that split kicking in. So a great way to learn. Most day traders lose, so frankly, it's a lot cheaper to lose here when you're learning than funding 5, 10, 20, 30 grand and losing that, which is what happens to most new traders, including myself when I first got started. Just a great way to learn. Most people don't know what futures are. When you're day trading futures, you can day trade indexes, so the NASDAQ, the S&P 500, the Dow, the Russell. You can day trade commodities like gold, silver, all kind of different stuff. No PDT rule, so you can day trade. Patterns and equities are very similar. And it's just a great way to trade. Most pro day traders trade futures. If you want to check it out, I'll put the link up one more time. And I'm going to get out of here. Y'all be good. You can also find a pin at the top of the chat. Remember, guys, not an investment professional. I'm not liable if you lose money. Always make your own assessment. Trade responsibly. I might have no idea what I'm talking about. Might be wildly wrong about everything I say. Don't copy me. Understand CFTC 4.41. Hypothetical or simulated performance have limitations, guys. So we went up to this 350 level, rejected at the top. Still in a big range. As I said earlier, we're in a big range, but sideways trend. And we've been in this basically all morning. So just be careful, guys. Understand what's going on in markets. And, yeah, be good. I'll see you guys later. Y'all be safe. Have a great day. Good luck. Red or green today? Let me know in chat right now. Looking at our poll numbers before we end the stream. 66% are bullish. 34% are bearish. And, yeah, I'm going to get out of here. Y'all be good.